When you see price breaking below the major higher low of a bull trend, or breaking above the major lower high in a bear trend, the game might be changing. That's the reversal we're after. If identifying the highs and lows felt tricky, we nailed it in part 1. Here's the strategy that binds it all together. I call it the major trend reversal. Step 1. Go to any pair you like on any time frame. This is the 5-minute time frame of the euro-dollar, as that's what I like to trade. Step 2. Identify the trend and map out market structure using the 3 pillars I explained in part 1. Let's take the first example we did. Here we have a bull trend, and this is the major higher low. Step 3. Wait for price to break this major higher low. The break needs to be strong. We're not talking about wick teases here, for it'll reduce our win rate. This is the candle that broke the major higher low. Notice that it's a very strong break. Step 4. Once you see price retracing, use the Fibonacci tool on the leg that broke the major high, from the highest to the lowest swing point, using the body closes, like so. Step 5. Place a pending order at the 50% level of the fib. You can create an alert here as well, so that once price reaches this point, you can get into the trade. Step 6. Your stop loss in this case will be at the swing high here because we're shorting. Make your target to be 3 times that of your stop, and then wait for either the target or the stop loss. Never exit early no matter what happens. This is a set and forget strategy. This one turned out to be a winner. Example 2. Step 1. Identify the trend and map out market structure using the 3 pillars. Once again, here we have a bull trend, and this is the major higher low. Let's wait for price to break it. Step 2. This is where the break happened. Notice once again how strong this candle is. Sellers are trying to dominate the market. Step 3. Price starts retracing. Time to draw the Fibonacci level from the highest to the lowest point of the leg that broke the major higher low using body closes. Step 4. Place a pending order at the 50% level of the fib. Stop loss at the swing high and target 3 times the size of the stop loss. Notice how quickly we were tagged in on the trade. Do not wait too long or you might miss the entry. Setting an alert here works best. Step 5. Now wait and watch. You'll either hit the target or the stop loss. Do not interfere. Another winner. Example 3. Step 1. Identify the trend. This time we have a bear trend. N1 is our major lower high and N2 is our major lower low. Step 2. Wait for the break of the major lower high. This is the candle we're looking for. Notice how the break occurred even before our market 0600 UTC, however, that's not what's important. The strength of the candle is. Step 3. Time to draw the fib from the lowest to the highest point of the leg that broke the major lower high, using body closes. Step 4. Place a pending order at the 50% level of the fib. Stop loss at the swing low this time, as we're going long. Target will be 3 times the size of the stop loss. Step 5. Now wait and watch. Let the market do its thing. Looks like this time price hit our stop loss. That's okay. Now move on. Example 4. Step 1. Identify the trend. Here we have a bear trend within 150 bars or so. This is our major lower high and this is our major lower low. For those of you confused as to why I didn't even consider this bull trend, go watch part 1 of this series. Step 2. Wait for the break of this major lower high. This was the first attempt, but it was only a wick tease. The real break happened here on this candle. Step 3. Draw the fib level from the lowest to the highest point once price starts retracing. Step 4. Place a pending order at the 50% level, stop loss at the swing low, and target 3 times the size of the stop. Step 5. Get away from the charts and let the market do its thing. Another cost of business day. Time to move on. Example 5. Step 1. Identify the trend. These steps are repetitive so that no matter how complex the example, you'll be able to handle it with ease. This one is a super clear bull trend. N1 is our major higher low, and N2 is our major higher high. Step 2. Wait for the break of the major higher low. This is not the break we're looking for. Wait for more price action. This time we have a valid break of our major higher low. Step 3. Time to draw the fib level at the body closes from the highest to the lowest point of the leg that broke the major higher low. Step 4. Place the pending order at the 50% level of the fib. Stop loss at the swing high target 1 to 3. Here, I had to readjust the fib and place another order because price went down again. Step 5. Forget about the trade. This one was a winner. You can see here that price almost took us out. This is why it's important to use a stop loss at the highest swing high, otherwise news events like this might take you out. Here's an Excel sheet that I journal my trades in. There are various setups that I trade, but let's filter this out to only show MTRs. Let's check out the Analytics tab for more info. Here you can see that in a span of around 1 year we got a total of 34 trades, 20 of them were losers, and 14 were winners, making our win rate to be 41.18%. That too with a 1 to 3 risk-reward ratio. This is just one pair. Combine this with other major pairs, and the possibilities are endless. You've seen how major trend reversals work. Now imagine turning news events like this into profitable opportunities. Comment "news" down below, and I'll make a video on it.